Hello and welcome to Banking Transform, the top podcast in retail banking. I'm your host, Jim Roos, owner and CEO of the Digital Banking Report and co-publisher of the Financial Brand. Community banks, deeply rooted in their local domains, have played a pivotal role in supporting the financial needs of individuals, small businesses, and local economies for decades, for centuries actually. But the digitalization of the industry has altered the playing field. Looking forward, what are the unique advantages of local financial institutions that they can bring to the table beyond we're friendly? What are the challenges they face in competing with larger marketplace leaders? And what are the strategies managements must adopt to ensure that they can remain future ready? I am very excited to have Jim Perry, the senior strategist at Market Insights, on the Banking Transform podcast. We'll be discussing how financial institutions that are community-based can best coexist in a marketplace that includes regional and national banks, fintech providers, and tech companies. Community banks play a vital role in the fabric of local economies, from small businesses to ordinary consumers. But these smaller institutions also face fierce competition from banking giants, especially amid digital disruption. So how can community banks leverage their strengths while future-proofing the road ahead? I'm so happy to have Jim Perry on the show today. It's hard to believe how much we interact on social media and at industry events. Yet this is the first time you've been on the Banking Transform podcast. For those in my audience who may not be familiar with you or Market Insights, can you provide a little backgrounder on both you and your firm?
Absolutely, Jim. And thanks for having me on the podcast. It's really great not only to kind of see you face to face again, since so much of our interchange is on social media, but it's a real pleasure to be here. Our firm, Market Insights, we're a small consulting firm that's been using research and customized data analysis to help our clients clarify choices and set strategy. Now, honestly, that strategy could be about growth, could be about marketing, could be about branding, could be about branch consolidation or culture. But our work is basically based on a fundamental premise that any strategy you set should be based on data about your customers and your market, and about your firm for that matter. Now, we've been around for nearly 30 years now, since 1993. And of course, during that time, the industry has changed a lot. We've worked with about 400 or so banks and credit unions, community-based. I joined the team about 18 years ago, with the focus on expanding our capacity to assist on issues of branding or marketing, and certainly on culture. It's kind of funny when we reflect back to those early days of the firm. It's like back then it was like, where do we put our next branch, right?
Yeah.
Now, these days, it's what do we do with the real estate we have? And more importantly, how do we grow? How do we stop being restricted just by our geography and take advantage of the new digital age?
It's interesting. Both you and I have been involved in banking forever. We also kind of get used to the way that organizations differentiate themselves. Credit unions differentiate themselves from traditional banks. Small community organizations differentiate themselves from big organizations, big banking organizations. But it's interesting because sometimes we can get into the narrative to the point of making it a habit. I'm going to start that over again. I'm going to start the whole set. I'm going to do the takeover. So you and I have been involved in the community banking space for a long time. In fact, I worked for a community bank way back in the late or early 80s, I guess it would, but not late 70s, but early 80s. And it's interesting because banks and credit unions traditionally differentiate themselves from each other. Mm-hmm. Small community financial institutions differentiate themselves from the larger big banks. And sometimes we can get into the habit of using the same narrative to describe the differences. When we work with community banks, a lot of times, we're close to our customers. We see them face to face. We can really serve the needs of the community. But with digital, it kind of changes the game. How you work with community organizations all the time. What do you do to say, yeah, hang on to that? But it's not like every one of your members or customers are coming to the branch the way they did in the past. In fact, your best customers you may never see after they open their account. How do you work with these organizations to differentiate the small organization today?
That's a great question, Jim, because the whole issue of differentiation becomes increasingly difficult in my mind because, on the one hand, I remember some of my very first meetings with banks years ago, and I would hear the same narrative. I often said if I had $1 for every time people describe themselves as friendly, I would be a millionaire.
You, me, and Shevlin talk about that often where we go, oh my gosh, it's not like you're not, but it's not a differentiator. Yeah. It's like saying you don't have rats on the restaurant floor. Good. That's good to know.
Exactly. Plus, on top of that, I would often remind our clients, it's like, look, folks, the national or regional banks that have presence in your market, guess what? They're employing local people too. Their employees go to school with your kids. Their employees go to the Rotary Club, same thing. But I get it. There's definitely a difference, still between community banks and credit unions and the larger banks. And it was interesting with the bank failures that happened this past spring, that triggered a whole nother round of, big bank versus regional bank versus small bank headlines that were really giving the smaller institutions an opportunity to kind of remind their customers and the, general public, what is the difference? Why are they important to the economy? And I think a big piece of that still is the role that they play in supporting small businesses and their local communities. Let's face it, they're interdependent. These community-based institutions kind of rise and fall on the prospects of the communities that they're serving. Obviously, I think because of how they're structured, they can often bring a greater level of attention and accountability to their customers and their communities. I mean, PPP was a great example of, how community banks came to the table, really meeting that small business need in a lot faster way and a lot more efficient way than some of the national banks could kind of pull it together. But here's the thing. We know that the largest banks hold the lion's share of all the assets. They hold the lion's share of the deposits. Community banks might make up 97% of all the banks in the country, but they only hold 14% of the assets these days. Same thing with credit unions. And I was looking at the credit union stats lately. Over 90% of credit unions only have $1 billion or less in assets. That means they're all having to do more with less. And it always comes down, in my mind, to not what products or services you're going to change up to try to differentiate yourself. It always has to be about the people. How can you really leverage your people to make that difference in your marketplace? I ran into a great example this past spring. A bank here located in Michigan, Mercantile Bank, they were being highlighted for some work that they did on financial education, which, again, everybody's trying to meet financial education, financial wellness, all the rest. But they said, look, we partner right now with Habitat for Humanity. We've been providing volunteers for a long time. We're going to take this financial wellness to a different degree. We're going to deploy some of our personal bankers. Instead of doing classes and putting up content on the website, we're actually going to put our personal bankers, make them coach one-on-one with the individuals that were going to be receiving these Habitat homes, to make sure that those individual customers could actually succeed in managing their financial households. So that was putting their people, their money where their mouth is, into the marketplace, taking financial wellness to a whole deeper level than just providing educational content.
It's interesting because that actually also helps the risk model. Because if you provide them the tools, the possibility that they're not going to be able to survive in this new environment with a new house becomes less. It becomes easier to, make it work. It's interesting you mentioned people, because people, while so important, it's not always enough. A great example, I have a business banking relationship with a large national bank in Brecksville, Ohio. And the people are great. I love all of them. They're all very helpful. They always serve me well when I'm there, and they take care of my problems when I have them. Right. However, that same financial institution has very old policies. They have technology that is not advanced at the pace in which I need as a small business owner. And as you look at a community bank or a community credit union, consumer expectations have changed, especially since COVID. And the realization of what can be done digitally, what can be done with technology, what can be done with data and AI has never been more, we've never been more aware of it, from right. My Hulu subscription to the way the restaurant at the corner treats me. So when we have these dynamics, not only the importance of people, but also the increasing importance of technology, data, AI, and personalization, how are you helping community banks compete effectively, at least at the benchmark level, with larger players to make it so that they don't fall behind in other areas, focusing too much just on the people aspect?
That's really the hard question right now for so many community-based institutions, because on the one hand, we can point to some of the great ways that the largest institutions are utilizing data and utilizing technology to support customers and members in more efficient ways and more productive ways. And then what will usually happen, the arms will cross, right? They'll put that body language up that says, oh, you know what, but we can't ever be them.
Yep.
And so they kind of shut down that whole dialogue sometimes. And they just get in their little box. And it's like, okay, we have to break you out of that way of thinking just long enough to say, all right, well, let's start with the things that you need to pay attention to. First of all, we beat this drum all the time, but you've got to get a handle on your data, right? You've got to be able to wrestle your own tech stack to the ground to make sure that you're looking at the kind of information that's going to help you provide better services to your clients, to your customers, or they're going to walk. I mean, I know I've heard you talk before very articulately about the onboarding process and getting deposits and loans and all the rest. If you can't do it in 3 to 5 minutes, you're done. But here's the thing. Sometimes banks forget to even look at the data that they have, not just transactional data, which, by the way, holds so much information. You could be anticipating customer churn by mining that data more carefully, looking at that data more specifically. But sometimes just the simple demographic data. Now, I bet you've talked to marketers that can pretty much say, well, our average customer age is 50 or 52, whatever. Great, your average customer age. But when was the last time you actually looked at the whole demographic spread of your customer base? We were working with a client not long ago where I said, folks, are you paying attention to the fact that right now about 40% of your customer base is over the age of 70? We know
red flag.
Right. We know where that story ends. Yes. We know. We
just don't know exactly when. Yes, exactly.
Right, exactly.
Yeah.
And unfortunately, as we all know, unless they can kind of make some of the tech improvements that they need to help them attract some of their youngest customers, they're going to face a tsunami of not only deposit loss, but wisdom loss on the part of their employees that are retiring, kind of wrestling some of the demographic reality to the ground. Has to happen. So sometimes when we're helping clients, we're bringing an outside perspective to their data that will allow them to see some of these trends and anticipate some of these trends, to at least raise it up to a higher level of urgency, saying, look, folks, you have to prioritize, how you're even storing and managing your data. If you still have loan officers that are holding information about customers on spreadsheets, you're in trouble.
That's a big problem, yeah.
But it is a problem, and it's something that I think now the cost of that is really starting to hit so many of these smaller institutions.
It's interesting because we more than ever, and you all obviously in your meeting with financial institutions, you use case studies of other clients that get it.
Right.
There's no lack of knowing what needs to be done. I think every executive at any size financial institution in any city, in any country, knows the elements, what they have to do. It's a matter of doing it. And, what I see a lot of times is organizations will go, yeah, but our data is all over the place. It's so unstructured. It's so terrible. It's got silos. It got this. What's really interesting that we've seen in the last 5 years, and you've seen, is that there's a lot of companies now that can take care of your data and develop AI insights on a composable solution basis, no matter what your data looks like, because they've worked with a ton of financial institutions from the major platforms saying, yes, we understand how bad it can be and all this, but we can make successful implementations, successful strategies out of no matter how bad your data is, even honestly, even if it's on paper, can't they?
Absolutely. And they're doing it ways that are now like core agnostic. So it really doesn't matter who you have your core provider relationship with. They can assist when, so many small community institutions have become accustomed over the years to relying on that primary core support to deal with these kinds of issues. But now I think the light bulb has finally come on for a lot of institutions. The only way we're going to manage this, the only way we're going to be able to survive this is through partnerships, through making sure that we can actually draw in the kind of talent and expertise that we just haven't had available to our team and to our organization over these years.
So when you see a situation like that, they need AI and data help. That it's out there, but they have a core provider. And let's say I'm the guy in the room that's got his arms crossed,
right.
And I go, hey, I have a core provider that's supposed to be able to do this, but they're not giving me the attention, which is not abnormal because they're smaller organizations.
Right.
What do you tell them on ways to break down the barrier of, oh, by the way, you may have to double spend, if that's the way you're looking at it, on something that you think your core should provide to get the insight and the capabilities and the talent you need today? How do you sell that to a financial institution?
Well, oftentimes, all you have to do is look at your market potential to really see, like, if you've got, let's say, over the next 3 to 5 years, your market growth is going to look a particular way, your business growth is going to look a particular way, that your member or customer profile is such. When you collect all those disparate data pieces together and begin getting a complete picture of their situation, I think sometimes these bankers just need it laid out in front of them, saying, you can't actually kind of meet the opportunities that exist for you without this level of expertise. And so one of the ways that, often meets a lot of pushback is we say, okay, I understand it's going to cost more, first of all. You have to seriously consider now what branches you're going to let go of, what assets you can redeploy in order to make sure that you can bring the capacity on that you need to survive moving forward. And let's face it, there are a lot of institutions that are branch heavy, that are just not producing the kind of income that they need to be or should be. But legacy kind of institutions and legacy thinking, unfortunately, has a lot of them treating them as elephants that they can't ever touch, Or these are the sacred cows.
Well,
right?
because they're people too. I mean, if you're the head of an organization that has 5 branches, let's say, you know all the people that work in those 5 branches. So it's kind of like saying, I have to get rid of a family member, when in reality is, you don't need to do that. At Market Insights, when you're sitting down with a financial institution, as I said, I think in most cases, they know what needs to be done to survive. But you also come with a whole, travel bag filled with case studies on how organizations like them have succeeded. I usually use the analogy, I sometimes have to make them sick before I can make them well. I have to show them what the potential is and say, very much like a doctor, you have to do the diagnosis and say, I'm sorry, everything I'm seeing here is something that but you probably haven't really looked at deep enough. That your customers are getting older, your branch is becoming less effective, you're paying way too much to handle each transaction compared to the marketplace as a whole. This is the only way out of it. But when you look at yourself, 17 years at Market Insights and working with financial institutions like this, how much different is the marketplace today as far as the solutions to get you to the finish line? And how much quicker can those be implemented? I mean, it wasn't too long ago that any strategy was going to be, I'm going to do this year. And now you have clients that are saying, I'm going to get this done this quarter. And I'll get my ROI that quick. It's the hardest part of your job today, getting the people that are sitting in a room like this to open their arms.
Absolutely.
In other words, embracing the change and accepting the fact that they need to do things differently.
Absolutely. That's actually been a challenge for the past decade, at least, because as we all know, and you often articulate so clearly, change is happening exponential, right now. It's just so dramatic at times. And the other day I was looking at an old Harvard Business Review article, and there was something in it, and I wrote this down, Jim, because I wanted to share it with you, because it really spoke to me. It said, radical change occurs when an industry's core assets and core activities are both threatened by obsolescence. Yeah. That's happening all around us in this industry right now.
And where the leaders recognize it.
Exactly.
To be threatened, you don't want to all of a sudden, as you said, all of a sudden you go, oh my gosh, how did I just lose 20% of my customers? Oh, they died. I'm sorry, but
they died.
But the reality of the situation.
I mean, I can point, and I have pointed at times to one of our situations a couple of years ago with a client where they were honestly losing $1 million in deposits every single month. And it was because of their customer base was dying, and they hadn't really taken a close look at their marketplace to see the degree to which the profile of the potential customers had changed. And it really required a reinvention. And I remind bankers, you don't have to be in that much pain in order to make change.
Yes.
But what you do have to do you have to let go of those banking as usual filters. I mean, let's face it, all of us as human beings, we all have to deal with change all the time in our personal lives and our professional lives. And we're going to respond to change in a variety of different ways. We can ignore it for as long as we can. We can kind of react to it, or we can be proactive and we can kind of anticipate that change, look at the trajectory of things that are happening. And part of what we try to help our clients with is actually not only taking a really honest look at where they are right now, but actually forecasting out far enough for them to see the trajectory so that they can see, look, if we don't lean into this, if we don't make some of these changes right now and elevate them to the kind of priority where we're actually going to get it done in 3 months instead of 3 years, that we're going to keep diminishing to the point where our only choice will be consolidation or closure.
Yeah. And that right now, we're starting to see that happening in the marketplace where organizations either throw up their arms or the government does it for them. You know, let's say you and at Market Insights, you go into a brand new financial institution. You have not met them before. They're under $10 billion. So, you know, the majority of community-based financial institutions are that size.
Yeah.
What do you usually anticipate being the 3 most significant problems that you're probably going to see right off the bat? Because you've done this long enough, and I remember doing it in the sales side as well, saying, you know what, I know pretty much what my pitch can be, what they have to fix before I even go in there, because it's a 98 percentile that I'm going to be right. At least it makes it so I'm talking their tune. What are 3 things that almost every community financial institution today needs to fix?
Well, the first one in my mind is always about their data. It's, you know, I can't tell you that, you know, some of the analysts on our team that are working directly with our clients to actually extract their data so that we can do a level of analysis on it. You know, some of the horror stories that we hear in trying to accomplish what should be a simple task. Because again, wrapping their kind of minds around that data piece is really hard for folks. So I know that their data is going to be a bit of a mess on the front end of things. And as much as we can do to help them augment their data, integrate their data in ways that are going to help them get a clearer picture of where they're at, that is one thing I know we'll be able to help them with. It's
going to bring them their answer. I mean, the bottom line is you're saying, just like a doctor again, if you let me take x-rays, if you let me do blood work, if you let me understand more about you, I guarantee you we'll solve some of the problems.
But the more about you is also about their organization, because one of the things I love to do with an initial conversation, often I'll ask kind of an icebreaker question of some of our clients where I'll ask them, okay, personally or professionally, doesn't matter, what's the riskiest thing you've ever done? And it always is fascinating to me. There's this kind of dance that goes on around a CEO table or whatever, you know, do I kind of share this with my colleagues? Do I say this out loud? But during the process, I'll always get a sense not only of how people understand the issue of risk, how they navigate that personally and how they navigate it professionally, but also kind of their appetite for change and what some of the dynamics that exist within an organization in terms of what I would describe as legacy thinking or more progressive thinking in terms of what needs to be done. And usually once I get a sense of the people in the room, I'll have a better sense of how we need to fashion our recommendations back to them in a way that they'll be able to understand them and receive them and hear them. Because right now, most consultants, we all know that we can make some of the best recommendations in the world, but if it's not to a receptive audience, it's just a waste of time and money. So, we do as much work on the front end to really understand the unique situation, not only of the markets and the customers or members, but about the institutions themselves. What makes you tick? What makes you work? Because it's only as we can bring change there and make adjustments to your thinking around things will you be able to actually kind of move out of old ways of doing things into the ways that are going to help things be profitable for you in the future.
Boy, that is such a great question. What's the riskiest thing you've ever done? Because I many times will consult sales organizations that are selling to the banking world. Mm-hmm. And I say, how likely is it that your sales team is going to try to pick out the things that are going to kill the sale? We don't. It's just not really a good feeling.
Right.
But unless you do that, unless you look at the elephant in the room, you'll never get there. And in fact, many times organizations will waste an immense amount of time trying to change something that the person really internally doesn't want to change. And I am sure with that question, which I've never heard it that way before, and I love it because I am sure that you can go into an institution, ask that question, and in your mind you're processing, this is going to die before it even starts, or we're going to spend their money and they're never going to get to the finish line, and we're both going to be frustrated. We're both going to be upset because the reality is you can push all you want, but if the person's not a willing partner, if they haven't shown any appetite for taking risks, you're going to be challenged by that. I tell the story about the fact that in a 2-year period, myself, I did a major transformation by changing the parts of the industry I'm working with. I used to work at a corporate organization that sold to about half of the marketplace in the financial service world. I was in charge of marketing services at Harlan Clark. And at the same time I left Harlan Clark, right about 2 years later, I decided to do some personal transformation, some things that were important to me. Well, at the same time, my wife left traditional retail sales, store-based sales, to be a digital retailer. And my son decided, unbeknownst to us, to say on one summer day, by the way, this is the last baseball game I'm playing, and he was playing travel ball, doing really well. We thought he'd play in high school and potentially college. And we said, what are you going to do? And he says, I'm taking up lacrosse. And it was interesting how habit forming, the taking on brand new risks without knowing at all what the future is going to bring can be habit forming. It can build momentum, but you need somebody to push that initial button to say, hey, you know what? We're all going to live. We're all going to be okay unless something terrible happens. It's your comment about acceptance of risk probably lets you know, okay, should I keep pushing this rock uphill? Or should I kind of say, cut bait, even though we might be able to make a good sale, it's going to be a painful sale. When you're looking at the marketplace today and we have the economic uncertainty and you have all the risk out there, but you also have on the other side, all these really good composable solution companies. How do you prioritize beyond data and AI? How do you prioritize what they should spend their money on today?
Well, oftentimes the issue of priorities is the one that I think we emphasize the most, because so often we see smaller institutions trying to do everything all at once, right? As opposed to saying, okay, what are the 3 things that are going to move us most quickly to the goals that we want to achieve? What needs the greatest attention? And so oftentimes, again, that's pretty institution specific. But oftentimes, again, you have to open that door to thinking about things in a new way. You're talking about that process that we go through. One of the things that it also identifies for us is not only where the roadblocks are going to be in terms of not only a sale, but the engagement itself, but also who are our allies? Who are the people within an institution that already know about some of the solutions that exist? They've brought a consultant in to tell them what they already know and underscore it so they can convince their board sometimes to move forward. I've seen like exec teams be all ready to move forward, and then you've got a board that shuts it down or drags their heels.
And you're brought in to talk to the board, saying the same things that the executive committee said, but it comes from a third party, so it's more valid.
And honestly, Jim, you know this as well as anybody. The role of a consultant is always about bringing outside perspective.
Oh, yeah. Yep.
It's about knowing enough of what's going on in the industry overall to be able to say, look, these are some of the solutions that are out there. These are the ones that I think are going to be most affordable for you and the ones that are going to help you do this as quickly as possible, as opposed to dragging this out over several years. These are the ones that are going to be with you past the actual implementation. They're going to support you not only during the process, but afterwards. Those are the things I try to keep my eye out for when I'm kind of looking at the various solution providers out there, because let's face it, these institutions, these smaller institutions, will not be able to compete and survive without those kind of partnerships moving forward.
Right. And they're going to have to trust them, these organizations, to run down the field on their behalf. That's the analogy I always use, that, and as long as they don't get in the way of the person running down the field, which obviously happens many times, where they go, oh, I loved everything you sold us, but not that way. And you go,
right.
Well, then you kind of break it. So Jim, both of us really embrace the community banking organizations. I've told you on different times, one thing I'm having the most fun doing is actually talking about community banks and their success in the marketplace. I do it both on this podcast and on the Visionary podcast sponsored by Alchemy. But it's interesting how the organizations that are getting it, who are doing really exciting things, have innovation at their core, have changed the culture of their organization to look at new ideas in a new way. What steps can community bank management take to foster a culture of innovation within their organization and to explore new business models and revenue streams?
First thing they need to do, as I was suggesting a little bit earlier, is they have to evaluate for themselves what are their own banking as usual filters. What are the ways that they've done business that they've been doing for sometimes decades, and realize that got them where they are, but it's not necessarily going to get them where they want to go. So, but the other thing that I often have to challenge in terms of shifting thought process, a lot of community-based institutions like to imagine themselves as being customer-centric. But I remind folks, that's a bit of a buzzword that doesn't have any meaning if none of your strategies are directly linked to your customer. And when I invite them to rethink all of their strategies, look through your current marketing plan or your current strategic plan or your, any plan within your institution, and say, if you can't connect that directly to your customers and the pain points that they're dealing with right now, you're not truly customer centric, because it's only when you begin to bring that kind of thought to the table can you open your mind to the possibility of, we're going to have to change things up. We're going to have to do things differently. We're going to have to innovate and find new solutions, because it's in the understanding of those pain points that we can say, wow, we have to come up with a new solution because what we're doing isn't getting it done. I love, just last week, Jill Castilla down at Citizens Bank in Edmond, who I love Jill. She's doing some incredible things and rolling out this new kind of effort with offering banking services to military families, especially to those that are going into basic training. She looked at the fact that a large number of them, I mean, Jill's from a military family. She's been in
and her daughter
herself.
so she uses her daughter as an example, I believe, right?
Right, exactly. And you've got these folks that are going into basic training and they don't have a financial institution relationship. More importantly, a lot of them have the kind of financial relationships with these predatory lenders. And so she saw a need and she went to meet it. And unfortunately, sometimes when we're thinking in a bank-centric way, that's all about the bottom line, that's all about our profit margins, it's all about this and that, which is great. We have to focus on those things. But if we lose sight of what the customer really wants, then we're not going to be innovative because we're not trying to meet the new needs that are happening. We keep trying to define things through the filter of needs as we understood them 10, 20, 30 years ago. I was teaching a class at a banking school. And so again, generally, these bankers were in their 30s for the most part. You'd think they'd be open to all kinds of new ideas and all the rest, but it was so clear that the culture of their own banks had so changed their thinking. I mean, we were talking about the issue of early access to pay, how that was a service that more and more individuals, in order to manage their own financial lives and their personal lives, they want to be able to access their pay a couple days early, or as they earn it, they want to be able to access it. And all of a sudden, again, the arms were crossed and it was like, no, that would be awful for our customers. It was like, wait a minute. That sounds like a dad trying to tell a son or daughter, you can't spend money on this. It's like, yes, there are tools right now that will give and empower your customers more freedom and capacity to actually manage their own financial lives better. But you're saying no because you think you know better? It's like, sorry, folks, part of the innovation that's happening also is going to help you, in that case, position yourselves as a provider of services to commercial banks. Like if you're trying to bring a new commercial client on, imagine how much better it'd be if you say, yeah, we can provide this service for all of your employees as well if we get this set up so that you can offer that to them. Think how much easier it'll be for you to recruit, your employees and all the rest if you provide this through our bank. Sometimes, again, I'm amazed at how much of banking is still happening through the filter of It's a Wonderful Life.
Well, it's strange because I wrote about this ways back, but said, the worst thing that organizations now have is their management training program, which it hasn't changed a whole lot from when I went through management training in 1976 at National City Bank, where you went through a rotation for a 2-year period to find out how the bank does things or credit union does things. Right. And what basically you're being told is, don't mess up everything. If you want to succeed through this management training program, you're going to learn how we do things. Well, that is no longer a good benchmark for success. And in fact, any kind of enthusiasm, motivation, entrepreneurial spirit, innovative mindset that came out of college or university gets killed within the first 4 weeks, because all of a sudden you're told, while they'll say money's made on the B grade loans, they won't make any. They'll only make A grade loans. And the marketplace, the reason why the fintech marketplace has done so well from a standpoint of making an impact and why people are diversifying their relationships financially is because there's organizations out there that view risk differently. that realize if they can hit a mass number, they don't have to make $500 a relationship to make it work. And I think one of the challenges we have now in the financial services industry is organizations are not looking at their flow of funds. In other words, they're lulled into a false sense of security thinking, oh, look at my base has no attrition. When the reality is, no, you're right. They're not closing their accounts. What they're doing, though, is opening all new relationships on a regular basis with organizations. And by the way, if you look closely, you'd see the flow of funds to SoFi, to Robinhood, to Acorns, to other banks, to other credit unions, where they have diversified their relationship. The days of my checking and savings account and mortgage loan are all the same financial institution are gone until organizations take stock and say, what do I not see? It gets back to your data and analytics point of view that says, unless you look at all these data points, you're not really understanding what your financial institution is doing. I look at the fact that, the satisfaction scores. Satisfaction scores, guess what? If you had terrible ratings, the person would be gone. You're not asking the right people. You're asking people that have a penchant for saying, I love where I bank. I will actually say, I like where I bank. I don't love where I bank in either my personal or my business account, but I'm too lazy to change it. So how do I react? I open accounts elsewhere and I get my services elsewhere. And the challenge today is we measure things the way they used to be measured before, and that's no longer acceptable. It's no longer successful. As you look to the future, how can community banks today position themselves as strong, resilient, and forward-looking?
Wow. That's such a hard question, Jim.
It's a good. Yeah, there you go. Now you're going to do one of these.
There you go. Tell me, make some sense for me.
Yeah, there you go.
I think a lot of times, first of all, it has to do with the leadership in the organization. To position yourself as relevant, to position yourself as innovative, to position yourself as being stable, all the rest. Part of it is you have to understand more about who your customers are and what they need. You've got to not only look at your data, but you've got to have the kind of conversations and make it possible not only for you to hear from your customers, but you've got to hear from your employees. You've got to create the kind of culture that allows for a frontline banker to, point out when the king or the emperor has no clothes, when they're seeing things and hearing things that are going to point to, we need to change things up right now. I mean, I love the deer in the headlights moment that's happening for a lot of bankers right now when they see, oh, look, Apple just took $10 billion of your deposits in 100 days. $10 billion. That's the kind of disruption that speaks precisely to your point, Jim. But again, unless you're looking at things and talking about things in new ways, kind of merging that digital experience, that physical experience, that personal experience, people aren't going to believe you. Because if you are still building branches with a stationary teller line that, looks like it did in the 1970s, you might as well forget it. Because if you think a 25-year-old is going to walk in there to set up an account, you're sorely mistaken.
That's such an important point. We talked about it before we went on the air that, if I had $1 million, $2 million to build a branch, and I'm doing it because I want to hit a new market or I want to build more account relationships with the younger community or whatever it may be, whatever your reason is, I guarantee you the amount of money you could spend on a physical structure I can use with data and AI to get what you want from an account relationship basis at a lot cheaper price. Unfortunately, we get stuck in our own mindset. It's frustrating because you realize there are better ways today. But, for instance, you mentioned the Apple example. If we looked at flow of funds, why couldn't a community financial institution reach out to everybody who has taken money out of their accounts and put them into what you realize is another investment option and come back to them with a special product for customers that have left that's at a higher rate, that basically that's what they're going for, because many financial institutions haven't figured out, it's been almost 15 years since we had to play the rate game in savings, and we're doing it right now.
Right,
well,
exactly.
Who's to say you can't build a special digital product for attriters? Mind you, the chance of them coming back is pretty strong because, number one, they were with you to begin with. You had the loyalty. You lost it because you didn't respond to marketplace changes. Like my mortgage. I had a mortgage at one institution. I was very lazy about changing as the rates went down. And finally, we decided to buy a smaller place down in Florida, and we were going to consolidate. And my financial institution that I was working with didn't even raise their hand until they saw that we were asking for all the payoff information. Right. And the CEO called me. I was amazed. CEO called me and said, "What did we do wrong?" I said, "You were never there. You thought you had the business, but you never said, you know what, we'll take a little haircut right now, but we think you should refinance today." And oh, by the way, in my case at least, it cost you money because we didn't just reset the price. We bought more. And I think all organizations, doesn't matter the size, but especially community organizations, remember the advantage you have. You have the agility and flexibility that big banks can't come close to. You have the ability where one strong leader can change an organization almost overnight.
Absolutely.
And most importantly, you have the keys as the foundation. You have community focus. You have people within the community that believe in you, that will trust you. And if you change to be a better financial institution, bank or credit union, they'll respond accordingly. You have the people part figured out. You got to take care of the tech and data. Jim, so happy to have you on the show today. Your company gives so many tools to smaller financial institutions that need help, that need that advisor to come to the table and say, by the way, guys, the emperor has no clothes. I got to tell you something. I'm gonna deal with the elephant in the room, and I bet knowing you probably even call out the people with the crossed arms going, I'm going to convert you, and you to the way of thinking they have to look at. Jim, right. How do financial institutions get a hold of you?
They can check out our website, formarketinsights.com. I realize that's very long, but that's all that was available back 30 years ago. But you can connect with me there. You can certainly connect with me through LinkedIn or social media. Very active on Twitter, as you know, for as long as that still lasts. We'll see. But yes, always happy to hear from folks.
Jim, we've only scratched the surface on the future financial community organizations and only scratched the surface on what needs to be done. But I think, a good starting place is to reach out to a company like Market Insights and you personally to say, okay, do me the belly check. Tell me, what am I missing? And I think they probably won't be surprised, but it's always good to hear it from somebody who's done it before and can bring case studies to the table that really can transform an organization. And you can prove, by the way, I've got 10, 15, 20 organizations that have done it before you and not died. So
exactly.
Thank you. Yep, go ahead.
I was just going to say, I was thinking the other day about one of the organizations we worked with out west. We've worked with them probably 4 or 5 times over the last 20 years, and they've grown exponentially, and they've also kind of found new fintech partnerships that have allowed them to take what they do in their local community and expand, because fundamentally, one of the things we have to let go of in terms of community organizations, we have to redefine community. We have to no longer make it about geography. We have to realize that in a digital age, our community has a much broader meaning.
Yeah, that's a great ending point, because I think we sometimes define things as we've always defined things. And the reality, we've already seen embedded banking, banking as a service, all these elements make it so you can double, triple, quadruple your size overnight by rethinking the traditional business model. Again, Jim, thank you so much and best of luck going forward.
Thanks. My pleasure. Thank you, Jim.
Thanks for listening to Banking Transformed, the winner of 3 international awards for podcast excellence. If you enjoyed what we're doing, please take 30 to 45 seconds to show some love in the form of a review. It really helps us continue to get guests like Jim Perry. Finally, be sure to catch my recent articles on the financial brand and check out the research we're doing for the Digital Bank Report. This has been a production of Evergreen Podcast. A special thank you to our senior producer, Leah Haslage, and our audio engineer and video producer, Will Pritz. I'm your host, Jim Marous. Until next time, remember, the advantage of a community financial institution is their agility, adaptability, and the ability to focus on the community at large, where every institution's contribution can make a significant impact.